right. Well. Welcome back, everybody. Welcome back to the stream. Welcome back to the action. Hope you're all doing all right. Yeah, we just came out of an extremely bullish weekend. Been breaking all major levels, all critical areas, and now of course we want to know what's about to happen. Where is this gonna go? Are we going straight for the moon, or are we still expecting some bearish reaction? Are we still expecting some sort of a reversal? Let's dive into the charts and let's have a look and see what kind of predictions, what kind of reads we get from all this, from this entire situation, right? So first of all, looking at the hourly, we are closing in to some critical areas coming from RSI levels here sitting at 78.11, breaking this major area, the high at 19,400-ish, would already be a strong continuation signal. Going from there, of course, we might still experience at least a little bit of retracing for people taking profits, of course. If you were one of the lucky ones acting on this low signal here, the bullish divergence, and holding on for the entire ride, well, I salute you, I commend you. You did great, but of course, hindsight 2020, I'm more one of the cautious players who took profit as soon as we hit some resistance. Yeah, I prefer to play the chicken game rather than going balls out and be the hero. This entire structure here has been very, very solid, more bullish activity than bearish activity, and also very surprising because usually over the weekends, volume being lower, we usually have some more trending and ranging. Well, at the moment, this was absolutely not the point. That was not the case at all. So yeah, let's have a look, let's dive in and let's see where we are at. First of all, we do see on the RSI that we did make a very, very nice ranging up, but RSI seems to be topping out at the 74-75 area as we continue to range up and to print higher highs. Now, in itself, this is not really problematic, but from a trader's point of view, I would be very cautious here and start thinking about, yeah, basically I took profits way too early, but basically from here on out, I would really start being more and more cautious. Why? It's logical that the more the price goes up into this trend, the more people, even the cavalier ones, are going to start take profit for themselves as well. So if a majority starts to flip their bias, like okay, this is where I want to get out, the more the price is going to start trending the other direction again. So be careful for this one. Now, on the other hand, let's have a look at the reads of these RSI levels. Well, of course, those ones we don't have to really care for anymore. We do have some bearish divergence build up from this entire situation, but I would rather do a measurement here from the top of the RSI sitting at 78.11 and see what kind of reads we get out of this one. So let's have a look at 78.11. Well, that would start closing in on the 19,027 area. So let's move this one up. Whoopsie. Let's move this one up to 19,000 and 25. Something in that area, somewhere in that range. All right, what do we notice? We notice this big node of volume here, which could be a line in the sand that we would draw. Potentially could be a resistance area, but breaking this area could also potentially turn into a support area. On my behalf, the way I would be trading this, I would really look at the blue box area. Maybe we make a blue box like this, and we can draw this more like this. Okay, so the way I would see this is more like closing within the lower part of the blue box. This could start mean a little bit of retracing, maybe taking some support here on one of these areas, and look at how this trend line that we had earlier could still be a little bit of a gauging area where we could try estimating to find some support, some sort of support. Let's maybe extend this one just because it looks rather useful, and doing so we start also seeing like a rising channel, a rising triangle that we could be using. Also for the same token, we do have still this trend line that still has not been broken. So it's up to you which one you prefer, which one you want to base your calculations on, or start setting up your chart. This is completely free for your discretion. But then on the other hand, what would happen if we would get rejected from this area here? I'm just going to remove this line. There are a few points of interest where we could find more support, of course. I would just draw them here on the node sections, and maybe also try to find some areas that could be valid support areas, because like this one here, it's a little bit tricky, but this one could look really solid. We did find some support here, we did find some resistance and some support here. We also encountered some resistance here. So I think this one could work for our purpose right now. Let's have a look as well at the downside on the lower end of the spectrum, and let's redo our reads that we got here to see if we retrace at which levels we could start expecting some bullishness, some bullish support. So let's go with the 27 on the RSI. Let's do like this. And this gives us 17,270, which is already a rather large area. So this would be something like this. And of course, we're gonna do this for the other lows, because after such a run up, this one and this one could start serving as a gauge, as an area where we could also find some support. And this is actually really good because those lows are already within the blue box. So looking at these, we could just extend the range a little bit further and get, of course, a very nice area that gives opportunities to buy back in. So let's have a look at maybe just the high range, because all this will be in between anyway. So let's go with 44.8. And this would be, wow, way up there, 18,200. So yeah, we don't really need a lot for this entire structure to turn completely bullish again, right? Let's go with this. All right. And actually, this starts to make a little bit of sense. Again, we have this node here defending the lower area. We also have this one here with the point of control being the point where the most active trader activity, trading activity has found place. So yeah, this starts to look a little bit like something. Now let's have a look at the higher time frames. You see, I pay attention. I haven't said higher term time frames, right? So let's do the same thing with these two local lows here. Maybe just this one already to start off of. Let's do 31. Let's have a look and see. The 31 would be setting us at 16,600. Okay. Well, this is a little disappointing. Obviously, we are not gonna go this low. So let's do the other one here, sitting around here. Let's have a look, 37.35. This will also be rather high up there, 17,200 and something, 17,250 more or less, which would be here on this this first little node section below the big node. Is it possible? Would be possible, but I do believe, at least coming down to this area here, we are going to experience some bounces. I think the low end of this spectrum would only be valid if we start really breaking below. But yeah, once we are inside this bottom area of the blue box, then yeah, I would just start being very, very cautious. Depending on how volatile the move down would be, if there is any move down, of course. I don't want to be creating any sorts of panic, of course. But yeah, for now, I would just use this as a reference line. Once we start really breaking lower, maybe even set this even a little bit lower on the big volume node at 17,735. Yeah, I think this this looks good. Thinking more like once we break below this, there is no quick way to recover. Recovery will still be possible. Right here in this section, we are still not changing the momentum. But if we really close below this blue box area, this is where I would start thinking about either ranging again or actually some more downtrending. Once we break below this area at 15,400, this is where I would stop thinking in the bullish way and start changing my bias more to a bearish, conservative, ranging, but leaning a little bit more on the bearish side. Now, on the other hand, because this is not looking bad at all, don't get me wrong. On the other hand, if we reach up here, this is where we are 100% bullish, and this is where we know the continuation is not over. Even if we retrace a little bit, just buy the dip because the bull run has only signaled a strong position in the market. All right, so I think I make myself really clear here. Above the blue box, very, very, very bullish. We're gone, and it's very nice. Once we start ranging here, be careful. Look for some support, maybe here or here. You set your stop losses. Be careful. This 17,750-ish region would look like a nice stop loss area, maybe a little bit lower, not to be liquidated too quickly, but really, really watch out, because once we start trending below, I do believe at least some resistance and a bounce could happen before and if and when we range up again. But once we are here, this is a land of really not sure, and this is where I would actually tell people to be as cautious and as careful as possible. On the other hand, if we break above here, then an idiot can trade this. You buy the dip, you hold on long enough, even if you missed it a little bit and it does go a little bit lower, it's gonna print higher highs. Okay, this is almost a short thing. It's just here below 17,750 and the 16,500-ish area that I would start thinking, not sure, not really sure. Below 15,500, 15,400, game over. Change your biases. Be careful. You'll be making more money shorting than longing. All right, so just for the fun of it now, let's move over to the higher time frames and let's see what kind of reads we get here. Because as you can tell right now on the 3-hour chart, already we are having this bearish divergence signal. So for now, for the 3-hour chart, it is imperative, if we want to see continuation, that we have a close above the blue box. Very, very, very important, or yeah, we are going to see at least a good correction to the downside. Now let's look at the 4-hour chart, and on the 4-hour chart, we are just gonna do the same thing. I'm not gonna go for the ultimate low because we already measured this off. We know that this area is kind of sort of the point of no return. But yeah, let's look at this section here, and let's measure off maybe also this one here. It's going to be a hard one because we don't really see a local low here. What I'm going to do also is use the Fibonacci tool to make a little bit of a measurement, and maybe this is also going to help us a little bit at seeing where we can. Oh yeah, you see, so for this area here, everything below 15,800 would be a bullish signal. So you know what? Let's just put a little bit of a marker here. So like this, and I'm gonna have a quick look at the streams. All right, streams are looking healthy. This is awesome. So this one here, and maybe we can also measure the low of this structure. Just see if anything has changed for the reads. So this says 14,500. I said 14,700. So yeah, maybe we can draw this a little bit lower again. So we are lowering the bar, the point of no return. But basically, look, it does make sense. Once we print here below, this was a very nice, strong local low. It's very plausible to assume that this is where we are going to start seeing lower lows and lower highs being printed, right? So yeah, kind of sort of this area here, area of no return. I'm going to put a horizontal line just for the fun of it, and maybe we can look at the higher time frames and see if they agree with this. And oh, like I said, the Fibonacci retracement, I think here we are already at a nice time frame to see that this is a local low. So yeah, what does the Fib tool tell us? The 0.5 would be sitting at this blue line on the node, just smack on it. And this is already a very nice read, retracing here, pulling back a little bit to the 0.5, very plausible, retracing to the 0.2 or 0.3, also not a bad move. So yeah, as long as we don't break too low inside this blue box, I think a very strong continuation is within the cards. All right. So yeah, now let's move to the 5 hour. Let's see if the 5 hour has something interesting to tell us. Let's look at this section here, saying at more or less 39. Let's round it off a little bit. And what does it say? 17,000. See, these reads are getting really small. Let's look at this low. This is 26. 26. 14,700 does agree more or less still with this area, and I think the 700 is a much better gauging level, just because it makes sense. Once we break down through this entire structure, the bias of the majority is going to change, and obviously especially this section here is going to start forming some strong resistance, and could potentially also turn again into a very strong area of support. But we're gonna have to see how these things play out, and if and when it does play out, what it looks like, because there is no way to be predicting the future, and I don't want to take this hubris on me. This is very pretentious if you think that you can do this. Now let's look at the 10-hour chart. The 10-hour chart is looking rather good. Basically, on this entire structure here, we've been building one massive bullish divergence. So this was what I was talking about before the weekend. This entire structure has bullishness printed all over it. How high and how far will it go? Again, I would rather be cautious and at least wait for a closing above this blue box, printing a new high. But then again, we also want to have a higher high on the price section that at least makes a higher high with the RSI. So where are we sitting here? So let's call this more or less 70, 73, and 81. So let's do 72 just to cut it smack in the middle. This would be at 20,100. And guess what? This is still more or less where the green line is sitting at. Let's do it like this. 100. There we go. Let's look at the other high, but I don't think this is a real necessity to break it. I think breaking one of the lower ones here, the prior ones, would already be a very, very strong signal. But of course, we do still have this situation here, and we don't want to get caught into a bull trap. Right? But I think the bull trap is here in between those and those blue lines. Maybe let's color code them completely differently. What kind of color do you like, guys? How about purple? Yeah, cool. Yeah, I think here in between the purple lines, this is where the bull trap could be. This is where we could still see at least a pullback, and after it pulls back, yeah, what kind of a reaction are we expecting? Because remember that we have a series of bearish divergences here, 1, 2, 3. And if we pull back, we will have a fourth lower low on the RSI, which would just give us a continuation of the bearish divergence. Right? Does that make sense? We build a bearish divergence, then we have a continuation signal. Continuation of what? Continuation of the bearish divergence. The bullish divergence sits here with all these other areas, and if we want to see a continuation, we need to see a higher high corresponding with a higher high. Okay, so this is going to be a very easy area to go off of and to see what your future trades should be or could be. All right, now all this is enough talk about the future and about possibilities. Um, on the daily, like I said, this line, it was going to break. Like you don't have to be a genius to see once you're in a corner that the stochastics are going to break out of it. Does this mean a lot? Actually, it does not. Yesterday we were sitting around the 50 area, so like I said yesterday, could go both ways, could go either way. This is why I've been taking profit cautiously. And now, it's playing a little bit the waiting game, seeing which area we are breaking and which trend we are going to choose for the coming days and probably coming weeks as well. All right. Before we close this off, because I'm trying to keep my streams a little bit shorter, I know that especially the YouTube people don't have such a long attention span, and I'm really sad to say this, but yeah, usually, basically, in the majority, we're talking about the spoon boys, and those are not the ones that I'm trying to feed. But let's just keep it wrapped up a little bit. We're going to look at the dollar index and see whether the dollar index is going to make its recovery move or if it's just going to keep going to lower lows. Right here, right now, what we see is, if we squinch our eyes a little bit, is that we have been printing a series of higher lows on the RSI. Yeah, very nice. 3 times a little bit higher, and higher than this section here, while again we have been printing lower lows on the price action. Yeah, so basically this would give the dollar a lot of potential to be pushing its way back up. And like we said, usually the dollar and Bitcoin and traditional markets have their inverse correlation just because the one is traded against the other, you know, supply and demand, push and pull, which makes a lot of sense to me. But this is not a major rule. This is just a gauging to see whether the majority of the markets are still looking at the dollar price to base their beliefs in the Bitcoin action and in the traditional markets action. Now, if the dollar starts moving up, there are a few critical areas that need to be broken before we can actually talk about a continuation. And those are the RSI levels at 53 and eventually also 62. But I think the 53 already would do it. So let's crunch those numbers and let's have a look at what we need to break. So let's grab our blue box. Where the heck does this come from? Okay, no, this was not what I wanted to do. And maybe I want to remove all this. No, this is Monday. This is Monday madness. Let's move this right over here. Yeah, beautiful. Maybe we can remove this as well, and maybe even remove this and this and this. We really don't care about all these levels for now, and like this. And now let's fill out the blanks. So this high area is sitting right here. This is the one we measured. Let's even engulf the wick, and 91.8. So 91.8 right there, right this and there. So it's very easy to read, I hope. What we need to do is break outside of the range of this blue box. Beautiful. We have continuation. Price might even dip a little bit, but we are in the area of building continuation. If and when, of course, we close outside here, we will see a higher high on the RSI, and coming from these areas, oh no, I missed. We will see a higher high on the RSI. Coming from this area, we have a higher high going into a lower high on the price action. This is bearish divergence, and this is where price is going to start tanking or ranging at least a little bit more. Let's finally look at E-mini futures, because it seems that E-mini futures also started to make its correction, the one I was expecting from before the weekend. On the weekend close, there is no trading activity. Those markets are closed over the weekend. But what do we see right now? Right now, we don't see any sort of bullish divergence except for these areas here. Price probably already took some support here on this lower node. The question is now, are we going to break this area here, which could be forming some sort of a resistance area? Let's make it a little bit cleaner. What am I doing? What am I doing? Did I grab it? Yeah, something like this. Looks about right. Looks about right. Yeah. So as you can see, let's move over to the higher time frames. We do have also bearish divergence forming here. Higher low, so just continuation. nothing very, very special. I do believe that for E-mini futures, the pressure is building up towards the downside, which would make sense if and when the dollar is starting to create some pressure to move up. Now, of course, is the question, is Bitcoin going to stay and to keep being correlated, or do we see a decoupling, people losing faith in all these traditional things, just like all the crypto early adopters have been preaching for ages and ages? And are we finally going to see the rise of crypto? Well, this is all to be seen. This is all very, very future talk, but very interesting nonetheless. So I wish you the best of the best. I wish you a very, very happy day. Keep your position safe, keep your eyes peeled, do your technical analysis, and don't just take my word as a prophecy. You know, I might be right sometimes, my opinions might be wrong most of the times, but that doesn't matter. It's the way you analyze your charts and the way you go over every time you see something different and how you interpret these things. So I wish you the best of the best, like I already said. I thank you for watching. I thank you for joining. Remember to hit the subscribe button, hit the like button if you like my content. If you want to support the channel and if you want to be part of my wolf pack, go to the website Wolves of Bybit, sign up to the Bybit platform, which is actually a really nice derivatives platform. You do this by scrolling down. Here is an affiliate link. It gives a kickback to the channel. It also gives you a very nice reward. And if you send me an email with your desired nickname, email address you used, and the user ID of Bybit, then I can send you an invite to my Discord channel. The idea is that I will be sharing the affiliate revenue amongst the most active players on the platform. Okay, so use this opportunity. This will build, I hope this will build a nice community of people motivating and helping each other, being there for each other, because the more action there is, the more there is to share. I hope that makes sense. So I hope to see you guys very soon on the Discord channel. I thank you for watching, and like I said, stay safe. See you tomorrow, 12:30 UTC, every day. Same time, same channel. Bye-bye, guys.